Hey, welcome everyone. Pat Mitchell here. And today I've got a couple things to discuss. So first off, I want to discuss and tell you exactly how to use time decay to your advantage in options trading. Now hang tight. If you're not an options trader and you trade equities, it's fine. Because the main part of this episode is telling day traders how to rewire themselves and how to properly think like a contrarian. Let's get into it, and make sure to like, share, and subscribe, because once I get to 10,000 subscribers, I'll be giving away a badass mobile day trading / creator setup. So you don't want to miss out on that, and you got to be a subscriber to get entered to draw for that. And that's it. That's all you need to do. No strings attached. So also at the end of this video, I'm going to go over a real badass play that I've got coming up. So I think you're definitely going to want to stay tuned for that. So, okay. So I've got a question for you guys. Do you know what a contrarian thinker is, or a contrarian trader is? One thing I want to talk about is being a contrarian. Everybody talks about it. You see it all the time. It's almost become, some sort of cliche in the world of day trading. But what it really means is, like I always say, looking at the stock market and looking at day trading in general in bizarro world terms, okay? So opposites really apply. And if you use that to your advantage, and every time you come up with something that doesn't go your way, or a negative, we could look at it like, flipping it into a positive and using it to your advantage. So this is where the first part of this video comes in. So at the beginning, I said that we're going to discuss how to use time decay as to an advantage in the world of options trading. So a lot of people what I've noticed is they're leaving either equities or options. They went to equities, now they're going over to options, now they're going over to futures. I'm seeing this run rampant. And don't get me wrong, futures trading is great. I'm sure there are lots of advantages. And when you ask someone why they're leaving, and one of the main advantages to futures trading, they'll tell you that there's no time decay with these contracts, which is correct, and that's wonderful. I get it. But if you are leaving something that you have put your time and money into learning, such as options trading, and you're just going to cut and run and just completely abandon it because it's difficult or it's hard, that's not the right way of doing things. If you continue to do that, I'm telling you, you're going to fail. You're going to continuously look for that next shiny object in day trading, and you don't want to be doing that. You got to stick to what you're doing, you got to hold your ground, and you got to learn it. So how to use time decay to your advantage. Okay, so time decay. So with options contracts, especially in consolidations, if the equity is consolidating, the price of your premium goes down. It fluctuates. It just goes down, okay? And a lot of day traders, they freak out because they're starting to see red and more red. It's just consolidating. That's all it's doing. If you're freaking out because it's red and it keeps getting redder during consolidations, but it hasn't given you a reason to exit, you're either in too big or you're way too emotionally charged, okay? You got to curb those emotions. Now, it's about your entries. Your entries, especially with options, are very important. You can't just enter willy-nilly or wait for over-confirmation. If you do that, the price of your premium it's not going to be good. That's not what you want to do. You need to buy on red and short while green. Is that the front side? Yes, it's a front side. We don't trade penny stocks, especially in the world of options. So you, as it's coming in, screaming into that predetermined level, you take the trade coming into that level. And you can start averaging in, or as soon as it gets really close, you can hammer it. Now, there's a whole strategy behind it. I'm not going to get into that per se on this episode, but that is how you use time decay to your advantage. So as that, let's say we're going short. Okay, we'll just use one quick example here. So as we want to go short at a predetermined level, as the stock is ramping, coming, screaming, squeezing into that level, you want to go short. And the reason for that is in times of volatility, the price of the premium will absolutely plummet. It'll plummet. So it's like getting in at a way, way better price. See, now for those of you that are understanding I'm telling you, this is gold. This is the way to do it, because this is using time decay to your advantage. You got the price of that premium. You shorted that stock at such a good price that even in times of consolidation, that time decay won't hurt you. It's your entries. So with that being said, I kind of want to shift gears into why traders may leave. And I'm seeing it quite a bit. They go to equity, then they go to options, and then options are too hard, the time decay gets them, and then they're now going over to futures. It's fine, you want to experiment with different things, that's fine. But I will tell you what, from experience, instead of jumping around from boat to boat to boat, you got to stick with it. If you think you've proven consistency with something, you haven't, because you haven't given it enough time. And that is one of the most detrimental things that a new trader or a struggling trader can do. They finally find a little bit of success. They find a little bit of consistency, and then they have problems or something isn't going right, and then they jump ship. I'm telling you, guys got to stop doing that. This shiny object syndrome and the holy grail, it doesn't exist. Stick with it. Stick with one thing and learn it. So now, like I said, let's switch gears into how to rewire yourself and how to properly think like a contrarian. So, a contrarian is someone that generally thinks opposites. I'm very contrarian, okay? Now, as I said before, a lot of people like to throw that around. It's almost become a cliche, but they don't fully understand what that means. If you were a true contrarian, you wouldn't tuck tail and run at the first sight of something that is a little difficult to manage, or you can't figure it out and you're getting frustrated and you throw a tantrum and you leave options trading. I'm not doing this anymore. That time decay keeps getting me. Listen, it's not time decay that's getting you. It's not the market's fault for anything, for any product, for any little the way a certain product will trade, or the little technicals behind these products, such as time decay and all the other Greeks and this and that. It doesn't matter. That's not the problem. You know what the problem is? Go to your nearest mirror and take a look. That's your problem. It's you. It's not the market. I hate to be the bearer of bad news, but that's just the reality of the situation. It's not the market's fault. So what do? Let's solve the problem. You need to look at these things as little problems to solve. Some of them are big problems. Some of them maybe can't be solved. I don't like to think that way. I like to think that all problems can be solved. You just need to sit back, relax, breathe, and think. So how do we solve the problem of time decay? Okay, so instead of trading for a week, sit back and really watch how that time decay works. Sit back, watch those premiums as they're screaming up into certain levels and just bailing ass down into certain levels. Use it to your advantage. Every negative can be turned positive. That is the proper mindset of a trader, of a successful trader. And if you are able to do that, if you can come up with any type of negative and flip it positive, I'm telling you, you will make it. And you know, you won't just make it. You will be a badass fire-breathing dragon. To make it to the 10% is difficult. But that's not where your day trading career stops. That's where you want to keep pushing and keep learning, getting better and better and fine-tuning, and trying to come up with solutions to problems. Stop letting little hurdles get in your way and you end up throwing away all of that hard work. I see way too many traders doing that right now, and it's really frustrating. It's super frustrating. It's traders that I've worked with personally that are switching over to trading different products and this and that. That's great. You want to spread your wings and fly by all means, but do it for the right purposes. Don't do it because time decay. There's no time decay with futures contracts. Use it to your advantage. If you use things to your advantage, you can really capitalize in the markets. Mindset, folks. I cannot stress that enough. So let's go over that play now. Look up the chart, S-O-N-O, Sono. Okay, so I'm telling you right now, if you can get a pullback to the 9 EMA at a minimum, and you'll see the next support level down at the range it just broke out of. If you can get a pullback into there, I would go long. Now, that's up to you. This isn't financial advice, right? But I personally will be taking this for a long-term hold, long-term. Sono's quality is great. They just had blowout earnings. There are talks of Apple and other companies buying them out. It's just talks, it's just rumors, but at the price that it's at right now, if you can catch it on a pullback, I do believe it could be a very successful investment. Now, I'm not sure this thing could go to zero. I don't know, but I'm telling you the way the chart's reading right now, with it breaking back over the 200 SMA, it looks great. But it's a long-term hold. Even if this thing pulls back further and you're already in, you need to be prepared for that. Now, this would be something that I would take equity in. I wouldn't trade options in it. I don't know if it's optionable. I haven't checked that because I'm not going to be trading options with it. But if, like I said, a pullback to the 9 EMA, I would start in and I would add in to that next range support. It is the top of those peaks. There's like 2 or 3 peaks there. That would be the support. All-time lows isn't very far away. If you average incorrectly and you hold to that, that's fine. This is a long-term. This is long-term. We're looking for a buyout in the future. So that's what I wanted to share with you. Make sure to like, share, and subscribe. I hope you guys learned something from this. And please watch this again if you aren't understanding and you want to fight this type of information and piss and moan about it. Watch it again. I'm pleading with you guys. Stop bouncing around like that. Stop doing that. Start solving problems instead of running. Don't do that. It's only going to set you back further and further and further. This is why the learning curve with trading and day trading is the way it is. It's because people get presented with a problem and they run. Solve the problems, tune it back all the way to its simplest terms, and you will be a successful trader. So thanks, guys. I'm Pat Mitchell, reminding you to go check out tricktrades.com, hit like, share, and subscribe, and we'll catch you on the next one, folks. Adios.